Companies' financial statements are good answers to every transaction. Let me give you some examples. The balance sheet tracking companies' assets and liabilities at a specific moment. Those assets like cash and the land, buildings and investments they possess. Prepaid expenses, they are meant to equal debt. Liabilities equals out when you add stockholders' equity. You can learn the equation easily. The assets equal liabilities plus the stockholders' equity. The balance sheet's a snapshot of the company. So income statement shows efficiencies. You see a quarter or annual summary to show profit if they made money. You start with revenue, the total sales you receive. So subtracting cost of goods and minus all expenses equals the profit, illustrating the money you're losing and making. And that is the purpose of the income statement. Every business or company use financial statements that you see. Helps investors see use of money. The income statement and balance sheets. Every business or company use financial statements that you see. Helps investors see use of money. The income statement and balance sheets.
What is a balance sheet? In financial accounting, a balance sheet is a summary of the financial balances of an individual or organization, whether it be a sole proprietorship, a business partnership, a corporation, private limited company, or other organization such as government or not-for-profit entity. Balance sheet. In short, the balance sheet is a financial statement that provides a snapshot of what a company owns and owes, as well as the amount invested by shareholders. Balance sheets provide the basis for computing rates of return for investors and evaluating a company's capital structure. The key takeaways. A balance sheet is a financial statement that reports a company's assets, liabilities, and shareholder equity. It provides a snapshot of a company's finances, what it owns and owes, as of the date of publication. The balance sheet adheres to an equation that equates assets with the sum of liabilities and shareholder equity. How balance sheets work? The balance sheet provides an overview of the state of company's finance at a moment in time. It cannot give a sense of the trend playing out over a longer period on its own. For this reason, the balance sheet should be compared with those of previous periods. What is the balance sheet formula? Assets equals liabilities plus shareholders' equity. A balance sheet is calculated by balancing a company's assets with its liabilities and equity. The formula is total assets equals total liabilities plus total equity. Total assets is calculated as the sum of all short-term, long-term, and other assets. Total liabilities is calculated as the sum of all short-term, long-term, and other liabilities. Total equity is calculated as the sum of net income, retained earnings, owner contributions, and share of stock issued. How do balance sheet work? Or sa Tagalog ay, paano ba gumagana ang ating balance sheet? Assets equals liabilities plus shareholders' equity. This formula is intuitive. That's because a company has to pay for all the things it owns, assets. Ito ang pagmamay-ari ng kumpanya. And by either borrowing money or taking on liabilities. Ang ating liabilities ay ating utang sa isang tao or sa kumpanya. And or taking it from investors. Ito ang tinatawag na shareholders equity. What does a company balance sheet tell you? A balance sheet shows what a company owns. Ito ang ating pagmamay-ari gaya ng cash, inventory, and property at marami pang iba. And owes, ito ang ating mga utang na hiniram natin katulad ng rent, wages, utilities, taxes, loans na kailangan nating bayaran. At ang pangatlo, how much as shareholders have invested. Ito yung mga ininvest na mga shareholders sa ating kumpanya. And what is the importance of a balance sheet? Regardless of the size of a company or industry in which it operates, there are many benefits of a balance sheet. Ano nga ba ang mga benepisyo ng ating balance sheet? Balance sheets determine risk. This financial statement lists everything a company owns and all of its debt. A company will be able to quickly assess whether it has borrowed too much money, kung nangutang ba siya ng sobrang pera sa kumpanya sa mga ibang tao. Whether the asset it owns are not liquid enough, meron ba silang sakto na assets para mag-invest sila, or whether it has enough cash on hand to meet current demands. And again, the importance of a balance sheet. The purpose of a balance sheet is to give interested parties an idea of the company's financial position, in addition to displaying what a company owns and owes. Dapat nila pinapakita kung ano kanilang pagmamay-ari at kanilang mga utang. Dahil dito, pinapakita rin ang company's financial position sa mga interested parties o mga interesadong investor. And it is important that all investors know how to use, analyze, and read a balance sheet. Dapat importanteng alam ng mga investor kung paano gumamit, mag-analyze at magbasa ng balance sheet dahil ito ay nakakatulong sa kumpanya at sa kanilang buhay ng kumpanya. A balance sheet may give insight or reason to invest in a stock. Pag maganda balance sheet mo, maraming investor ay mabibigyan ng reason kung bakit sila mag-invest sa'yo dahil maganda ang inyong kumpanya financial position. The limitations of a balance sheet. Although the balance sheet is an invaluable piece of information for investors and analysis, there are some drawbacks. Because it is a statistic, many financial ratios draw on data included in both the balance sheet and the more dynamic income statement and statement of cash flow to paint a fuller picture of what's going on with the company's business. Sa company business, kailangan natin maglagay ng balance sheet and income statement and statement of cash flow para makita natin ang fuller picture kung anong nangyayari sa ating company. For this reason, a balance sheet alone may not paint the full picture of a company financial health. Kailangan kasi natin buuin ang ating accounting cycle. Why is a balance sheet important? The balance sheet is an essential tool used by executives, investors, analysts, and regulators to understand the current financial health of a business. It is generally used alongside the two other types of financial statement. Number 1, the income statement, and the number 2, the cash flow statement. Balance sheet allow the user to get at a glance view of the assets and liabilities of the company. The balance sheet can help users answer questions such as whether the company has a positive net worth, whether it has enough cash and short-term assets to cover its obligations, and whether the company is highly indebted relative to its peers. The example of a balance sheet. The image is an example of a comparative balance sheet of Apple Incorporated. This balance sheet compares the financial position of the company as of September 2020 to the financial position of the company from the year prior. In this example, Apple's total assets of $323,888 is segregated towards the top of the report. This asset section is broken into current assets and non-current assets, and each of these categories is broken into more specific accounts. A brief review of Apple's assets shows that their cash on hand decreased, yet their non-current assets increase. This balance sheet also reports Apple's liabilities and equity, each with its own section in the lower half of the report. Nasa baba ang ating liabilities and shareholders' equity. The liabilities section is broken out similarly as the assets section. Parehas lang sila ng liabilities and assets, with current liabilities and non-current liabilities reporting balance by an account. The total shareholders' equity section reports common stock value, retained earnings, and accumulated other comprehensive income. Apple's total liabilities increase, total equity decrease, and the combination of the two reconcile to the company's total assets. What is included in the balance sheet? Ano nga ba ang nilalaman ng ating balance sheet? Sabi dito, the balance sheet includes information about the company's assets and liabilities. Ang kumpanya natin daw ay naglalaman ng assets and liabilities. Ang assets, ito ang pagmamay-ari ng kumpanya. And on the other hand, liabilities, ito naman ang utang ng kumpanya. Depending on the company, this might include short-term assets such as cash and account receivable, or long-term assets such as property, plant, and equipment, PP&E. Likewise, its liabilities may include short-term obligations such as accounts payable and wages payable. And long-term liabilities naman ay naglalaman ng bank loans and other debt obligations. What are the use of a balance sheet? A company can use its balance sheet to craft internal decisions, though the information presented is usually not as helpful as an income statement. A company may look at its balance sheet to measure risk, make sure it has enough cash on hand, and evaluate how it wants to raise more capital through debt or equity. So guys, thank you po and see you next time. Maraming salamat po sa panonood at pakikinig. Ang hinihiling po lamang namin ay meron kayong naintindihan sa ating discussion ngayon. Thank you po.